Alright, what's up y'all? Just wanted to chop it up with you real quick and talk about and review the number one performing stock that I have in my overall dividend income portfolio. So what you see in front of you right now is my dividend income portfolio with Fidelity, and these are all the companies that I'm currently invested in. And so I've sorted this list by the top performing companies down to the worst, basically showing which ones have I made the most money on at the top and which ones am I losing money on. So you see at the bottom here, I'm currently losing about $50, or I'm down $50 with Costco. And at the very top of this list is a company by the name of LTC Properties. I'm up just over $42. And so just taking a quick look, you guys can see that I've actually been adding to my position in this company for some months now, dating back to June. As you see, since June, I've been adding and buying more and more shares of this company, and you can see that it's done very well. Each time that I've bought into this company, each purchase, each transaction has actually gained money. 70 cents, 9 cents, $3.45, $4.05. So all the way up to present day, each time I made a purchase with this company, that price point has improved and I've gotten capital gains added to my position. So we see here that I'm just under 13 shares with LTC Properties, but just because it's the number one performing company in my portfolio right now doesn't necessarily mean it's going to be the best position to have going long term. So I just wanted to take some time right now and kind of analyze this company and review this company with you guys and just kind of go over some of the details to keep in mind and to consider. So the first thing that I always start with when I'm analyzing a company, whether it's brand new and it's not already in my portfolio, or if I'm just reviewing my portfolio and I'm trying to determine if I want to sell out of a position or get out of investing in a particular company. So I always start with Seeking Alpha, and they have this dividend scorecard here just to really break down the numbers and keep everything easy to digest. So we see that currently, as of the last trading day, LTC was trading at just over $39 a share. They have a per share dividend of 19 cents. And what I really like about the company is that they pay a dividend every single month. And as you get on this journey and you start to invest in these companies, what you'll notice is a lot of the big dogs, a lot of the big names, right? Your Exxons, your Chevrons, your Costcos, your Targets, your Apples, all of those types of companies that are well known, that are household names, they're household brands. They typically pay a dividend every quarter, which is once every 3 months. So what I really like about LTC Properties is that they pay their dividends monthly. But if you listen to my previous videos, you'll know and understand that a very important number that you want to focus on is a company's payout ratio as it pertains to their dividend payments. Now, the payout ratio is a number that you don't want to be high. So the closer this number is to 100%, it's more of a red flag. You want this number to be as close to zero as possible. And the way that you can think about the payout ratio is for every $1 a company makes, the percentage is how much they have to pay back to their shareholders in dividend. So that means for LTC, for every $1 that it makes, they have to give out 86 cents back to their shareholders in dividends. Now, you might not quite understand why that's important, so I'm just going to break it down for you. If they have to pay back most of their money in dividends, that means they have less money on the back end to open up new stores, open up new facilities, offer new products, get new customers, things of that nature. So it makes it very hard to expand in their market share and continue business growth into the future. However, for LTC, it falls into a very specific role or category, if you will, when it comes to having a high payout ratio. So I just want to break that down with you guys. We're going to take a look. But first, you might be asking, what exactly is LTC Properties? What does it do? That's the most important thing. What is LTC Properties? So we're going to go take a look right here. LTC Properties is a company that operates as a real estate investment trust, or a REIT. Now, I'm going to break that down a little bit more in just a moment, but we want to take a look at more specifically what type of real estate investment trust does LTC operate in, and what they operate in, or the category or the market that they serve, are assisted living and skilled nursing facilities. So this is for like the elderly, geriatrics, nursing, long-term care, things of that nature. So just a quick look at their portfolio, you'll see that they've got 184 properties spanning across the entire country, all the way from California to North Carolina, South Carolina, Georgia, Florida, Texas, New Mexico, Arizona, so on and so forth. So you see that they've got a pretty wide footprint across the country. And this is directly from their website, just showing where their footprint is, and you can just take a look. But more specifically, what is a real estate investment trust? So a real estate investment trust is basically a company that owns and operates real estate assets that produce incomes. That's the long and short of it. That's what a real estate investment trust is. Now, I know I mentioned just a moment ago that REITs or real estate investment trusts, they operate in a very specific way as it pertains to the dividend payout ratio. And most importantly, it is the tax law. So I just brought this up on Investopedia because I wanted you guys to see this right here. To qualify as a REIT or a real estate investment trust, companies must pay a minimum of 90% of taxable income in the form of shareholder dividends each year. So basically, per the tax law, they have to give out most of the money that they're bringing in dividend income. So you go back here, and now it makes sense why LTC Properties payout ratio is so high, why they're giving back so much money in dividend payments, because per the tax law, they have to do so to continue to operate as a real estate investment trust. So that gives you just a bit of understanding as to why this number is so high, sitting at just over 86%, really almost approaching 87%. But let's dig deeper. So we know now that LTC Properties is a real estate investment trust. We know the type of arena and market that they serve. They serve the long-term skilled nursing, assisted living market, that arena. But on a deeper note, there is an article by the Motley Fool that really goes into deep detail about whether or not LTC Properties is a great dividend stock to invest in. So I highly recommend that if you're interested in this company or if you want to learn more about it, going to take a look at this article on themotleyfool.com. But there is a specific paragraph that really breaks down the long-term potential challenges that the company might run into. All right. So there's two things that I wanted to read to you guys right here. And it says about half of the REIT's rents come from assisted living properties. The other half of the portfolio is made up largely of nursing homes and other long-term care assets. The long-term concern as you move up to these higher levels of care assets is that third-party payers become an increasingly important issue. For example, only about a third of residents pay their own way at LTC's nursing homes, with the rest of the rent there covered by Medicare and Medicaid reimbursements. There's additional risk in this because those two government-run programs can and do change their terms. So operators can get hit if costs go up, but Medicare and Medicaid payments don't increase enough to offset increasing expenses. That, in turn, can lead to financially stressed tenants for LTC and other healthcare REITs. This isn't a knock against LTC per se, since the issues affect any REIT that owns higher level care facilities. It is something that will always need to be top of mind here. So the reason why I wanted to spotlight this article is it shows that while there may be a long-term concern with whether or not Medicare and Medicaid reimbursements may offset the increased costs of running the business, it is something that comes with the territory of operating as a healthcare REIT. Now, the conclusion of the article is very interesting here. It says, is it worth owning? LTC's 5% dividend yield is a bit higher than Welltower, 4.5, and it goes on to say that, for example, LTC hasn't increased its dividend since October 2016. A portion of that relates back to the above noted tenant troubles, so dividend growth isn't a huge draw here. If that's what you're looking for, then other REITs would be better choices. Note that Welltower hasn't increased its quarterly dividend since the start of 2017, and Ventas, while working on a 9-year streak of annual increase, didn't increase its dividend as usual in the fourth quarter of 2019, potentially putting the streak at risk in 2020. So overall, basically what Motley Fool is saying is that right now, LTC is relatively strong, but if you're looking for a stock that is consistently batting back to back with increasing its dividend amount, that might not be the best look for you. And if we double back here to Seeking Alpha, you'll see that there hasn't been any dividend growth with LTC. So they've been paying monthly, and we can check out the dividend history, right? They've been paying monthly, but there just hasn't been any growth. They've been stuck at 19 cents per share for quite some time now. So they've been able to hold on to that and be financially responsible with maintaining this monthly dividend payment to their shareholders, but they haven't been able to increase it. So going back to the Motley Fool article, they break down. However, it is hard to call LTC a great dividend stock because of the lack of consistent dividend growth. It is impressive that LTC has been able to maintain its dividend while dealing with a troubled tenant. So this isn't really meant to be a knock. It is simply that achieving greatness is hard. While it's fair to say LTC does manage to earn a solid good dividend stock call, it just doesn't have what it takes to be called great. And I kind of take that as saying, hey, they're doing what they need to do financially to maintain business operations as well as paying their shareholders. But right now, they're not in a position to increase their dividends. And in my opinion, that's a very responsible thing to do. Keep your dividends conservative. Don't overpromise, don't overpay so that you can continue business operations the way that it should be. But I just wanted to share that with you guys, a quick analysis of the number one performing stock in my portfolio. If you guys have any questions whatsoever, please don't hesitate to hit me up. Let me know your thoughts on LTC properties. If you have any questions, if you think it's a good buy, if you think it's something that should be not invested in, or if I should increase my position, I want to hear it all. All right, you guys, as always, peace.